For more, Elyse Greenspan joins us now. She's managing director at Wells Fargo, covering the insurance sector. And the point here, Elyse, isn't to be alarmist, but to try to understand the scope of what we could be seeing if these weather forecasts are accurate. And who are those losses primarily going to fall on and where?
Yeah, exactly. And obviously, a lot depends upon the strength of the storm and exactly where it makes landfall. But, within Florida, the losses would fall first. There's, a bunch of Florida domestic companies that would feel a big chunk of the loss. And then, there are obviously big, national companies that, do have presences in Florida, like, traditional homeowners insurers like Allstate and Progressive. But a lot of the larger companies, and even the Florida domestics, right, they buy a lot of reinsurance. So this is a loss that would really also bleed into, the reinsurance market. And some of the, larger, reinsurers that we cover, Arch Capital, Everest Group, and Renaissance Re, they would all, feel a share of the loss as well.
Arch, Everest, Renaissance, just repeating, those people could catch that. Again, on the reinsurance side, you think Progressive could be hit on the more traditional side. What are the losses we're looking at so far from Helene?
Helene, we view that as, a double-digit billion-dollar loss. Our base case estimate for that right now is around $10 billion of insured losses. And, could be, even, trickling a bit above that as well, as it's still early days relative to that, storm that made landfall a couple weeks ago.
And that's because this is all primarily water damage and massive flooding, and those are excluded from most policies. And as we know, very few people had flood policies in those areas. They didn't think something like this would happen. So the cost of the storm, the economic cost is I've seen maybe upwards of $150 billion, but that could fall on homeowners directly.
Yeah, exactly. So usually, a rule of thumb is around economic losses are usually around 2 to 3 times insured losses. That could obviously be higher, to your point, when flood makes up a greater component of any loss, because, a lot of that, flooding is not covered under traditional homeowners policies. Coverage can be bought under the National Flood Program, but that would not fall, to, any of these traditional homeowners insurers. With commercial policies, there could be some, flooding that's purchased with, with those policies, but with your traditional home policies, you would not see flood coverage included.
All of this has sparked a lot of conversation, Elyse, about what we should do to make insurance affordable for people who are in these both directly affected zones and also for those who might not have flood nationally. Should there be some sort of mandates to get more people into this program, bring down costs for everybody as these events become so much more common in areas that never expected to suffer such damage? What are you hearing on the insurer side?
Well, look, insurers, that's what they're in business for, right? To, provide coverage for these instances. But, it's also, they want to, get paid for providing that coverage. And, that's part of the reason, right? Flood being so susceptible to loss with these types of events. If there was going to be anything that, any product or coverage that would fall to the traditional companies, they would have to, price, price for that risk to take on, any additional coverage related to flood losses, around hurricanes.